You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you're doing well. Today, I want to discuss with you the stock buy of the month. I want to bring one company especially to your attention every single month. And for the month of September, we are going to look at Franco-Nevada. FNV or FNV.to, so trades on the both stock markets, so on the Canadian side and on the US side as well. The company has a market cap of $31.5 billion, offers a dividend yield of 1.20%. So not a big one, I will give you that, but it's a dividend grower since 2008, since its IPO, which is pretty cool. So Franco-Nevada, kind of ironically, I'm not a big fan of commodities, and this one is essentially a gold streamer. So not a gold digger, a gold streamer. Big difference between both, right? Jokes aside, the difference between a gold mining stock and a streamer is Franco-Nevada focuses on owning assets. So we're talking about land, like piece of lands, mines, but they do not operate the mining per se. So instead, they receive royalties from those gold miners. I mean, I say gold, but it's like 75% comes from precious metal. Most of it is gold, a little bit of silver, some other mining, and a small portion is also coming from oil and gas. Kind of ironic, but yeah, not just about precious metals, but most of it's really gold if you want to track what will affect the stock price. So since they spend a lot less money than gold miners, their cost of operation is really relatively small and makes them a little bit, I don't know, like protected against gold prices, commodity price fluctuation. Of course, if like precious metals go up, prices go up, they will make a lot more money. But at the same time, if it goes down, they will not get into trouble. First, because their cost of operation is not that high. And second, even most importantly, it doesn't have any debt. So which is kind of great, right? So even if we enter into a very bad period for commodity prices, Franco-Nevada will still show weaker results, but will not get into any trouble, which is most of the time like the best thing ever. And a pretty rare thing to find among most companies. So what's the problem of Franco-Nevada, or why is it on my buy list right now? Well, the thing is, since November of 2023, so almost a year ago, there was an important mine, Cobre Panama, that has been halted for a lot of reasons, and then there was a change in the government. So long story short, Franco-Nevada is trying to get the mine like open back up, and it's not working that well. And since it is one of the biggest part of this company, biggest asset, it has greatly affected the stock. So just to give you an idea, in 2022, Cobre Panama generated a revenue of $223 million, and in 23 it was 248.9, so 249 million. And keep in mind, it was halted in November, so we would have reached over 250 million, which makes it one of its most productive asset in terms of revenue. So of course, when you put a stop on a big mine like this, well, it creates a little bit of a panic there. So the stock price went down, and since then, it has not been able to fully recover it. So it went up a little bit. So the stock price was around 145 at the beginning of the year. Right now, it's trading about $20 higher, so around like 163, 165, but still pretty far from its highest peak of like $215 that was reached in 23 and then in 22, and right after COVID, of course, in 2020, that was like pretty much the highest price we saw. So still room for expansion there. If you look at the dividend triangle, it's not going to be the prettiest because, of course, the revenue has slowed down since 23. The earnings took a beating because, of course, Franco-Nevada took an impairment charge also on the mine. So that kind of hurt the earnings per share. I'm really curious to see what's going to happen with the dividend as well, as Franco-Nevada started the year with a dividend increase, which actually ended 23. So in 24, the dividend was increased by 6%. So are they going to be able to do another good raise next year, knowing that it's been like more than a year after that the mine will be altered? I don't know. It's going to be interesting. It's going to show also management confident in the business model and also in the ability to reopen the mine or not. If you want to have more information and more visual, I actually did an article on moosemarkets.com about Franco-Nevada. So you can see the dividend triangle there, and you can see also a little bit more information about the business model and the risk potential. So you can go on moosemarkets.com and read the entire article. And it also helps when you see the trends, so you'll be able to understand a little bit more what's going on with the revenue, the earnings, the dividend. So it's good to have some perspective. So the investment thesis here is really, worst comes to worse, the company is not able to get the mine operating again, so they will not receive royalties again. I have a big doubt it's going to happen because this mine is also an important part of Panama's economy, so I thought that it will completely stop. But I mean, that would be the worst of the worst of the worst, right? If it ever happens, we still have the chance to get into a business generating like cash flow like there's no tomorrow, because they're getting those royalties all the time. They have no debt, so I don't see much of a problem here, even if the mine never reopened, which I doubt it's going to happen. So in the best of case, you're going to look at it in 5 years later down the road, and I don't think that any of this will matter at that point. So that could be an interesting play. I would call it like an educated guess, in a sense where it's not without any risk. The dividend triangle is relatively weak right now. The business is still highly dependent on commodity price, so you have to consider this. Of course, politics, regulations are also part of the risk that you have to consider for Franco-Nevada. The good thing is they can navigate through troubled waters all the time because of the fact that it has no debt, but still the stock price will be a volatile element. And the stability of some countries where they're getting those royalties could also bring some problems down the road. But if you're looking to make a play on gold and you don't want to take too much risk on it, in a sense where you don't want to invest in a gold mining stock that could crash and burn or cut their dividend every single time the gold price goes down, well, Franco-Nevada could probably fit the bill. Again, you have to do your due diligence. This is not a buy recommendation or a sell recommendation. I just want to highlight this one because in this kind of crazy market where all stocks seems to reach all-time high like 1 week after the other, Franco-Nevada is definitely not there. So there could be an interesting play on this one. Of course, it's a low yield, high growth type of stock. If you're looking for more ideas like this, you can always download the Rockstar list that is all about low yield, high growth stocks. So all companies showing a positive dividend triangle. So revenue, earnings, and dividend increases by over the past 5 years, and you can download them on moosemarkets.com/rockstar. So long story short, just go to moosemarkets.com, read the article, and download the list. You're going to get everything at one place. All right, Moose, that's enough for today. I hope that I have tickled your attention about this gold streamer. It's going to be interesting to see how this story develops. And tomorrow we are talking about a new enemy for inflation that is coming up. Actually, a new enemy for you guys, because maybe there are going to be some inflationary pressure on some goods. We're going to talk about that tomorrow. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.